I have to hit go live. I am going.
Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Tuesday, the 23rd of October. What an interesting day. The market is definitely not boring these days. A big gap down on the open. Stocks really rallied, closing down on the day, but certainly well off of their lows as we continue to work our way through earnings. You saw Cadence, a huge winner, up about 15% on great earnings. You saw 3M and Cat really struggle. So, we're right in the middle of earnings season, no doubt about that. Looking ahead to tomorrow's open, here we have the S&P 500 companies reporting earnings here tonight. You can kind of see, not necessarily the hugest names, but certainly not small names either. And we also have about 20 coming out tomorrow morning before the open. I actually think it's 21, if I'm not mistaken, including Boeing. Certainly they are huge. We have Freeport, FCX, Freeport McMoRan. We have quite a few, UPS, so still plenty of earnings on the horizon. Tomorrow's a pretty big day for the earnings calendar, no doubt about that. So as always, be sure you are staying on top of those earnings calendars. As we shift gears to our overall market, another, like I said, another volatile day, but certainly the bulls showed something today. We had a big gap down, a lot of selling overnight in the overnight market, a really big gap down on pretty much everything this morning. And then stocks really, after kind of bottoming out earlier in the day, rallied pretty strong. So have to be impressed with that. Now, on the other side of it, most of these charts are real nasty looking. And so while it's nice to see some bullish activity and some buyers stepping back in, we still have some pretty ugly charts from a technical point of view right now. Here, of course, we have the S&P 500. Did break down below that previous swing low. We had a huge red candle, of course, earlier in the day, rallied strong to kind of close back on top of that. I think we can kind of watch that low point as our support level, having not closed below that. Let's see how we respond to today. I don't know, I'm not jumping, out of my seat to go buy a whole bunch of stuff tomorrow, but today's bullish activity off of what really could have, been really ugly, is certainly impressive. Certainly the NASDAQ, though, holding up fairly strong, didn't even test that previous low and closing above the 200-day moving average, and got, being probably our strongest performer and best looking technical chart, I think, as of right now in the market. Again, not a lot has really changed. We still are within this range, and we're still very volatile. And so we're still have an overall bearish bias, as we've continually seen in the market. Dow Jones, very similar to the S&P, where we broke that previous low point that we set up a couple of weeks ago, only to rally off of the lows and close back above it, actually kind of closing right there, just barely above that 200-day moving average. I think we can watch that price just like we are on the S&P. I think that's kind of the new line in the sand, so to speak. If that breaks, there probably is an opportunity for more bearish moves. Right now, kind of it appears that it at least wants to think about acting as support, and I'm going to kind of respect that after the movement that we saw here today. Over on the Russell, we kind of rallied up towards that previous swing low off of of course, the day's lows. And I would expect that that's going to be our first challenge. That doesn't have to be a brick wall. That certainly can and oftentimes will act as resistance, but it doesn't have to. And really, when you think about this pattern, we can rally up. We just shouldn't go higher than that previous swing. So we can look at things like the 20-day moving average, which of course is going to continue to fall as the days go by. But certainly breaking and closing below support is, no surprise. The Russell has been the weakest. And I think, as we look at today's activity, sure, it came off of the lows nicely, just like pretty much everything else did. But it wasn't able to really do anything exciting to me, at least. So I continue to see that as the bearish, most bearish, I guess I should say, index in the market. We saw a ton of movement to the downside early in several of our sectors, including the material sector, all the way down. Of course, we kind of have been eyeballing this swing level. We have to go way back to kind of see that. And maybe it's a little easier if we go into a weekly time frame on a couple of these sectors here today to kind of see where they're at. Now, one thing I did find interesting, of course, we had this old resistance support. We've been kind of watching that area following this most recent breakdown. It also happens to line up with the 200-week moving average, which of course is a pretty long-term average. Maybe not everybody uses it, but I did find it very interesting. I've seen that a few places in the market where that 200-weekly moving average is acting as a bit of support. Overall, we continue to show a ton of bearish signals, right? But we did rally off of those lows. I will definitely be watching that breakdown point as a potential resistance if we're able to work up in towards that range. Certainly, I will be watching this area, specifically kind of today's low, for more, more selling pressure. But boy, this thing is extended to the downside. It's easy to look at things and say, well, it's really extended. But when we think about the material sector, I mean, we basically have had like 4, upward moving days in about a month. I mean, that is extended to the downside. I still not interested in buying that sector, but it certainly is very, very extended to the downside right now. Over on the energy sector, after breaking and confirming yesterday, continue to free fall, breaking again. We'll come back a little bit. They kind of have this old resistance area, and those of you who are in the market probably remember, back in the springtime where we were going sideways. We ultimately broke out and had that huge, huge run. I believe that was May when we broke out there, and this was kind of February through March. We're kind of back below that. Well, I don't think that's necessarily the strongest level of resistance. I do think it can act as that, and I do think it's worth monitoring as we kind of, no surprise, that's kind of was the top point here today on the chart. That's really about the most recent price that really we can look towards as we look at this sector. We're seeing a ton of weakness in the energy sector. Of course, right now, another rough day for crude oil today. A lot of room to the downside. I would expect that overall, again, not necessarily tomorrow, but I would expect that, it's not unreasonable to think we're going to be working back towards this floor down here as the month progresses. So certainly think staying below this is not a good thing. Breaking back through it, I'm not going to buy on that, but at least it would be something positive. But again, very bearish over there. Very similar within our financials, breaking down here today and working towards that old breakout point. Again, we'll come to a weekly chart just to illustrate this. That was a pretty big breakout point. If you come, change your thoughts for a minute and think back to cleaner times in the market, this ended up being a really nice cup and handle breakout to extend that trend. I think this is a very important price for the financial sector. I will definitely respect that as a level of support. I would be thinking about taking, closing any short positions that I have there. If that breaks, I'm definitely going to be even more bearish, I guess. Not like I'm a bull on it today, but when I look at it from a little longer term perspective, to me at least, that looks like a pretty important price point, and I expect it to be a very important line in the sand. As we move into the industrial sector, surprise, surprise, looks very, very similar. We're approaching a pretty significant level of support here too. Industrials are kind of odd to me right now. In many ways, I think we can look at the industrial sector as if it's sideways. It's had some ups and downs over the year, but really it's very, very sideways. When we bring this to a larger time frame, I think, again, it illustrates how important this support level is. If that breaks, I don't know about you guys, but this is going to look an awful lot to me like an M. And again, it hasn't broke. I'm going to assume that it's going to try to fight. But if that breaks, that's going to look like an M pattern. And of course, that is the opposite of a bullish pattern, right? Again, we're approaching, in my opinion at least, within our sectors, a lot of very key levels from a longer term point of view. We've seen short-term things get taken out. And of course, when the market's selling, that's pretty par for the course. But now we're approaching some pretty significant levels of support that I think are very, very interesting price points. From a longer term perspective, they're interesting to me as a bull. Now, I'm not buying them, as long as we continue to behave this way. But if I see some signals, I'm going to start thinking about it. And if they break, well, yeah, it's certainly going to be even rougher, probably, especially if we're all breaking like we've been doing lately. I mean, that's one of the things that happens when the market sells off so quickly like it did here. The charts get destroyed. And so traders, I might want to be in a bull in certain areas, but to get a signal to actually get in the trade, it has to break through so much resistance that's hard to happen. So even though I might want to be bullish on some things, I'm never getting the confirmation to go ahead and get into them. So, well, don't get me wrong, I'm certainly bearish overall. I certainly am open to, bullish opportunities if everything that lines up. But the problem is that we're having a hard time, getting triggers because of the way the market's behaving, how quickly it dropped, how much resistance we have to break to get through to some of those triggering points. Looking at the technology sector, of course, very much like the NASDAQ, showed some pretty good relative strength here today. I certainly, and again, this is planning ahead. I'm not expecting this to happen tomorrow or this week or maybe for the foreseeable future. But I really think that this chart looks nice for a potential break. Now, it's above 72. And again, I'm not holding my breath. But I really like the way that it's held up within this volatile market. It kind of, it got hit hard early, right? Just like most things. And it's definitely shown some relative strength. If we were able to break through that, that would be an area. Now, until then, I'm either neutral or bearish, and maybe something new will develop, and odds are it will if we don't, something doesn't happen sooner or later. But right now, that's kind of our major resistance point, in my mind at least, on the technology sector. And that could be an area that, if we were to get back on track and break out, I think that would be an area that would be interesting for me at least. Staples fared pretty well here today. Of course, one of the more defensive areas, and of course have been showing a fair amount of strength the last little while. Still kind of hanging out right in the middle of support and resistance, but overall showing some nice positive momentum and definitely one of the stronger areas in the market here today. Utilities continues to struggle at that resistance level, but again, that's not a surprise to any of us. We have seen that happen several times before in much stronger markets, right? So us struggling here today probably isn't the most shocking piece of endeavor. I still think we're watching it for a potential break. We haven't broken support or anything along those lines. As we look at our 20-day moving average, we're not anywhere near it, but that maybe it'll catch up, can potentially act as a support level. Right now, I don't think we're seeing any signals from a short-term buying perspective. But if we do pull back and start to get some, I would be open to that area. Certainly the breakout I would be open to as well. But again, we're struggling at resistance like we have seen many times before. And that's what's great about technical analysis. We were prepared for that, right? It would have been really easy a couple of days ago to say utilities are on fire, let's get in. But we knew how they've been behaving at this price for months, right? So we were interested maybe, but I don't know about you guys. I didn't really see a lot of things say, yeah, it's time. They didn't break out either. Over in healthcare, another interesting, at least moderately interesting development, holding that previous swing low, didn't even break it. Again, a lot of people, myself included, are still overall bullish on the sector, just not right now because it's hard to be from a technical point of view. But holding that support level is definitely a positive, and as kind of a sea of negativity from a technical point of view, certainly a positive to me, showing a little bit of relative strength as we approach that previous low point. Obviously, I don't think we have any confirmation or anything like that, and we're still overall looking pretty bearish, but that support holding does give me a little bit of faith in this sector. And again, whenever I see these things happen, I'm always excited because if it breaks, that's a pretty clean breakdown that I can expect that there's more downward movement, right? So whether I am a bull or a bear or I'm open to either, I now know, hey, if this breaks this support level that we've now tested on 2 occasions, that's going to be a sell signal. Get out of those bulls. Don't get into any bulls. Get into some bears. Maybe not that very second, of course. But I like when that happens. I like when the price tells me this is where you should do that. And sometimes we're just not there, right? But now we have a pretty good idea of where we're at. So I'll watch for a little bit of upward movement there Of course, many of our healthcare stocks are looking pretty rough, just like everything else. But holding support is definitely, it's worth noting, I suppose. Over in the discretionary, was looking pretty rough early on, but really bounced back nicely. One of the stronger bounce backs here today, kind of closing right back around that old support. I think you could argue that it closed back above it. Now, that doesn't mean a whole lot to me because you're either looking if you expect it to run up. For me, at least, that would be a bearish retracement. I wouldn't be interested in buying into it. So it doesn't really matter that it didn't, if it did or did not close above or below that breakdown point. But I have to respect that upward movement. And certainly there was a lot of places making some moves as the market rallied off of those lows. And this was definitely one of them. Very strong intraday showing. Again, pretty extended to the downside, not quite the same as our materials, which has basically been a free fall for a month. But overall, still a very bearish chart, making lower highs, lower lows, all of that fun stuff. But definitely worth noting that it had a little bit of a stronger showing here today. If we see some upward movement, maybe as we approach that 200-day moving average can be an area that might be important, whether it's potentially bearish entries or maybe there is something to this rally. It's way too early, in my estimation, to trust it. I would never buy something that looks like that, regardless of the ticker symbol, but definitely worth noting. A lot of back and forth over in the real estate sector here today, closing positive. Nothing really to see here, in my opinion, at least. We've seen downward movement. We now know that this the high that we put in yesterday should and act as a resistance level as long as we stay below that. I do believe that I will maintain an overall bearish perspective within this sector, but we can kind of watch, see if we're able to take some momentum. Again, if that breaks, that would be a buy signal. Whether that's just a signal to get me out of a short trade or to start thinking about long, that's going to be up to me, to decide, and up to you to decide for yourselves. But we know now where that line in the sand is. Right? We are in that downward trend. We haven't even challenged resistance. I will assume resistance is going to hold because I'll always bet on support and resistance because they're good money bets, right? And so definitely stronger showing today than I would have ideally liked to have seen because I am bearish on this sector personally, but it hasn't done anything technically to change my read of that sector. And lastly, over in the communication services, another bounce back day over there, still kind of stuck in the middle of the trading, range of support and resistance as we move into, a lot of these companies are yet to report earnings. So as we move into the next, the rest of this week and of course next week as well, we should get a little more clarity overall, but certainly with this in this sector as well. So a lot of back and forth, but a pretty strong showing. Interesting, day from a market perspective with so many things showing strong after what could have, it really could have got ugly today. It was a good gap. Things, the indexes were down well over 2% early in the trading day, broken through support in a lot of areas. It could have got ugly and stayed ugly. And so with buyers coming back in, maybe a little bit of faith in the bulls. Of course, volatility continues to remain high. I still think overall, this is more of a day trader's market than a swing trader's market, or at least directionally speaking. I still like, credit strategies and things like that in a market like this from a swing perspective. But, on the day-to-day, I do think it's a lot easier to work with this type of a market on the intraday as a directional trader than a swing trader. Just my personal opinion. As we shift gears over into the metals, gold actually started early this morning, really started to run up, kind of took out those highs that it's kind of been dancing with, had a pretty good run. We were well above 1240 on gold, ultimately sold off of the highs, kind of going along with the market. The market was rallying up. The gold was not tanking or anything, but it was selling off at the intraday, closing right back below that. So it just kind of looks like a little bit of a failed breakout to me. No big deal. We see that quite a bit. I think the read is still the same. As long as we're above 1220, we continue to have a bullish bias. I think it's fine if you're in. I think it's fine if you're waiting. As long as it's above 1220, I don't think we're seeing anything from a bearish point of view over in gold. Same with silver, of course. Some nice upward movement on silver here today as we kind of work towards some of those older intraday highs. Again, not a whole lot to say here other than that I have said several times before. I think it's fine if you're in silver. I think it's fine if you're buying silver. I think it's fine if you're like me and think that you wait until it breaks 15 to look for that opportunity. So really, I think this is overall, as silver and gold have been kind of boring things to talk about for months, right? Because it's basically always the same analysis, and they very rarely have done anything. They've had a few days where we saw some signals. Most of the time, we're not seeing them. Over in natural gas, a nice bounce back day. We kind of closed at or right, a hair below that swing low yesterday. Really established momentum back to the upside here today. I still think that you're looking at, from a bullish perspective, at a breakout on natural gas. I could understand people trading within this range. We've now gone a little sideways. I don't think that that's the best thing to do for myself, at least. So not something I'm looking to do. I think the break is the better signal on natural gas personally. Of course, I'm going to have to give up any potential opportunities between here and there, though, for that type of confirmation. So after seeing some nice upward movement here today, if we're able to carry through with that, I would understand traders moving in to give it another run at that resistance level. I just personally don't think I would be comfortable being one of them. As we look at crude, it was rough. It was rough. Those intraday lows finally gave out here today. Pretty easy fall to the 200-day moving average once we broke those lows from the last couple of trading days. Again, not terribly surprising there. A pretty fast fall to the 200. It held briefly, for a little while as some money started to come in off of that 200-day moving average before, of course, as you can clearly see, they stopped and we broke through that. Another pretty bearish signal. Really, as you look at, the crude oil, I think you're really looking at your next potential, bullish area that might be interesting down in that 64, mid 64 range where we've tested and used as a support level on multiple occasions. Right now, really hard to feel good about anything with it. It's below the 200. It's breaking down. It's made lower highs and lower lows consecutively. Pretty bearish. Certainly some volatility right now with what's going on over in Saudi Arabia. I think we watch this. I think if you're a bear, I think you could argue that that's a place where you're setting the target. If you're, potential bull, I think that's kind of where your eyeballs look next for a potential turnaround. That's like a couple days ago, they were looking to the 200 for the potential turnaround. Now, of course, we didn't see any signals at the 200, so no big deal, right? But certainly pretty rough day in crude. That's a big, big red candle. Probably get some profit taking, when people get a good excuse. We have the EIA report tomorrow, which can, of course, push this one way or another. So that will definitely be worth noting as we move in tomorrow on the crude market. And lastly, over on the dollar, boring, kind of hanging around resistance. We haven't seen the breakout yet. Haven't seen any real downward movement or confirmation that resistance is going to knock us back down. We just continue to test that 96 area. And until we break through that or give up, I think we just have to wait and see. I do know a lot of people are looking at the break and close of 96 as a nice bullish signal, and I would agree with that evaluation, but we have to get it before we get it, right? So until we get it, that is what we have to continue to monitor for. So that 96, again, another day, we've seen that act as resistance, for almost a week now. We know it was resistance a few weeks ago. But it's a big deal right now. For whatever reason, traders are really scared at 96. No one's willing to push it much beyond that. So that, ladies and gentlemen, is where we find ourselves after another interesting day, in the market. Like I said, the charts are ugly, and I do think that you have to be careful from a bullish perspective because not everything, I'm being a little exaggerating there, but so many things have multiple layers of resistance. But we did see some resilience today. And while that's not enough to get me buying everything up tomorrow, that is enough to get me thinking, if I start to see some signals, maybe I could get on board with at least some of them. We'll have to wait and see how that goes. But we do have some pretty key levels, as we saw in looking at the different sectors. And these aren't, swing levels. These are longer term weekly charts, weekly moving averages that we are testing or approaching right now. So I do think that those price points are going to really, have a huge impact. As we move into the next couple of weeks, we still have a lot of earnings this week, a lot of earnings next week. Then we'll kind of start dying down. Earnings season will be mostly over after last week. I think the next week and a half is really going to kind of let us know what the rest of our year is going to look like. You know, earnings have been a little mixed, but there's been plenty of really good earnings. There's been plenty of bad ones too. It's more mixed this quarter than I think it was last quarter. Just gut feeling. You know, I haven't done any mathematical calculations or anything there, but it seems like there's been a lot more misses than there were last earnings season. But we've also seen some really strong ones. And one of the things I like to do is find stocks, and you may not agree with my choice here, but something like Netflix that, in my opinion at least, had a stellar earnings report. And in a different market, of course, we gapped way up after a good, strong report. And then, of course, you know, today is the first positive day we've seen since the earnings announcement. In a different market, who knows? Maybe they're at 420. You know, maybe they're already broken out of resistance. Of course, they sold off. Netflix is kind of funny because they usually do this, right? No matter what the market looks like, they gap up, they sell off. They gap down, they rally up. I like to find stocks that I believe have good, strong earnings that got beat up for, you know, again, maybe I'm right, maybe I'm wrong, but I don't think it's Netflix's fault that they've dropped so much. I think a large part of it, at least, is market conditions. Now, I might be dead wrong, right? It's okay to have opinions and look for buying opportunities on them. I don't think that's tomorrow on Netflix. It's going to take a little while, you know, but I'm going to look for things that have those good earnings reports that if we start to see some buy signals, you know, those are the type of stocks that I could get behind. So one of my favorite things to do, and actually is one of my favorite things because I never hold a directional trade over earnings, is, you know, have something that has that good earnings report that I'm not taking advantage of because I don't hold directional trades through it. And then, hey, let it get beat up and then give me some buy signals. I now know that, you know, there were good earnings, you know, on Netflix. I think that's fairly objective. You know, I might be higher on them than the next person, but I think, you know, pretty much everybody would agree that their earnings were strong. And just wait. Maybe it's a month from now, but, you know, I'll get it. And maybe it's not on Netflix. And again, you don't have to agree with my evaluation on Netflix or anything I say for that matter. But if you kind of like that idea, I mean, look for some of those stocks that had good earnings reports that got beat up along with the overall market. And we get some signals here as the, you know, the next month or so progresses. Maybe there are areas that can be interesting. I remember Disney, you know, back at 44, this was several years ago, but Disney had a really great earnings report. It was a May, I don't remember the year, but we had a really rough May. It got beat up. And then when things simmered down, it took off and ran up to like 90, you know, not in that quarter, but pretty smooth run up to $90 over the next, you know, several months. So while that's an extreme example, that's why I like to do it. I like to find things that had good earnings and got beat up. So maybe something you can take a closer look at. Like I said, don't take my word for it. Always, you know, just trying to give you ideas. You can like what I do. You cannot like what I do. I just want to share some different perspectives with you. With that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. If you haven't already, be sure to subscribe to the Tackle Trading YouTube channel to be alerted to any new videos or live streams that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're watching day to day throughout the market week. If you enjoyed the market recap, it is always helpful and appreciated if you give us a thumbs up, let us know we're on the right track and help spread the message. And with that, ladies and gentlemen, get out of here. Happy trading, and I will see you in the next one.